If you're looking for professional day trading education and high-level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that. High-level professional day trading education, all here for free on YouTube and on X. And tonight, we're going to be talking about a couple of trades that I took. Both ended up working absolutely fantastically, but one ended up red, and I'm going to show you why. So give me 1 sec. I'm going to dive into these charts. I hope you all had a wonderful day. We certainly did. And let's do this. Okay, folks. So now that we're into the charts, let's go over the trade that ended red. Now, absolutely fantastic play, right to trade plan. For those of you that are new, that are just joining us here, these blue levels are struck prior to the market open. And they also have full-blown trade plans designed with contingency, meaning if it doesn't work out, what we will do next, as well as where we will enter, what we will risk off of, strike prices, everything. Everything is laid out for you. All you need to do is pull the trigger. So on this here on Qs, it opens up perfectly coming down into this previous closing gap fill as well as the 5 EMA. Now, you'll see the first set of entries, it comes down into that level, and then it slips further. It comes further. That's okay. We allow for that in our trades. We will always add into that wash, which I did, as you can see on that blue entry right there. And then you pay yourself because now it's proving weaker than expected. So we know, because it didn't hold that support level perfectly, that it is technically weaker than expected. So we need to get out of the trade, or at least the majority of that trade. We're not looking for major follow through. This is how I am green on trades where most people would be red, because I have the ability to read whether this is weaker than expected or if it is actually in fact strong. So took off the majority of the position, and I was still holding some, as you can see by my last exit. Now, I ended up executing or getting out of that trade, on a negative $2,575. Now, I'm fine with that. That was completely purposeful, and I even talked about that live as it was happening on screen share. And let me discuss why. So on this, we have a secondary opportunity. As I stated before, in the first long, when it dips below, I know that is weaker than expected. And if you take a look at SPY, and I could have executed on SPY, I chose to work the same chart, okay? Because that I'm already focused on it. So I'm working the same chart, and I executed short by buying puts on Qs. Like I said, and I know I'm repeating myself a little bit here, but I want you guys to understand that in this trade, because I know it is weaker than expected, I am going to enter into the opposite side of the trade. So instead of going long, I want to be short. Now, just because I'm seeing what I'm seeing, it's not a bias. That's what the price action and the charts are telling me, that it is weaker than expected. It doesn't mean that I want to completely clear out of my long position. It is still above. So it's still above at that time. Now it started above support, then it was below support, now it is back above. It has the ability to remount that level and push further north, go up. So I don't want to clear that position. It hasn't stopped me out yet, right? But I'd already locked in, I think at that time, I locked in $1,500, $1,600, something like that. And I was definitely holding a little bit too much for that, but I was now focused super heavily, and you can tell I'm really working this chart here on Qs on the short, because I know that that's where my time is best suited. I don't care if the long position goes red. I could give two shits about that. Now I'm working the real trade, the proper trade. And again, you might ask the question, well, why wouldn't you just stop out if you knew? Well, the thing is, we don't know with 100% certainty. There's no way of doing that. We can do our absolute best to dissect the action and dissect what we believe that the chart is telling us. Now, generally speaking, I'm more often right than I am wrong. So even though there is that little bit of a chance that I am wrong, I still need to work that position. Once I've entered into a position, any position, I work that position fully and completely. I have entered into a contract with myself that I will work my trade plan fully as intended. I'm not going to stop out because I'm seeing something or I feel something or I think something. If you do that in this game, you are fucking toast. You are cooked. You're dead because you will make the wrong decisions. Okay. The way this market is set up and designed and the way it moves, it's designed to make us make wrong decisions. So if you know that, you need to counteract that. And the only way to do that is to have your strategy and work to it. And that's it. Like, don't deviate that from that strategy at all. If you do that, you're fucked. You're doomed. You will not make it long term doing this job. You won't. It's impossible. You need to follow strategy. So even though with a large percentage of odds of certainty, I know that this is going to sell off further and I should get out. I don't, and I won't. I work that position and I will have absolutely no problems sacrificing this long. So once it, like right here, it's still holding support. Once it breaks through, okay, I know this thing's done and I'll just get out. And I get out and I could be more patient with it because after a large wash like this, you'll have a retracement to come back and test a level of resistance. It will do that. But I don't give a shit about that position anymore. I don't care. Don't care at all. Why? Because I am working now a larger position where I have worked into larger size because that's what the odds and the chart tells me to do. Do you understand what I'm getting at? Like, I think, and I mention this in my service all the time. I don't make these trade plans. This is what a lot of people fail to realize, even when they are claiming to be professional traders. They take credit for their trade plans like it's something they came up with. And that's not the case. That's not true. That's bullshit. They're not being honest. A true professional knows that you can only do what the market gives you. If you say that you're making the trade plan, you're taking, and this is kind of a little strange way of looking at it, but it is the proper way of looking at it. You're taking for credit for something that you have zero fucking control over, and it's bullshit. So, like I've said 1,000 times, I don't make these trade plans. The market does. I don't take credit for these trade plans. Now, members come in all the time and they'll see these trade plans work time and time and time again. And they always try and give me a pat on the back. And I always say, this is straight up. I don't make these trade plans. The market does. Right. And when you really understand that, now you're on that different level. If you can truly understand that you have no control over the market, right? And I know a lot of people will nod their head yes, that, yeah, I understand we don't have control over the market, but you're missing the bigger picture of that, the bigger point that I'm trying to get across. If you did understand that you don't make these trade plans, the market does, right? And you don't have control over the market, you would be doing a lot better as a trader because it changes things. It changes the way you're looking at these charts, okay? And again, I have no problem sacrificing one trade, a green trade that was beautifully green, and just sacrificing and allowing it to go red to work on something bigger. And that's what I did there. So I locked in a negative $2,575 on the long, which was green, allowed it to go red as I was managing a $9,475 trade on Q's puts, which is essentially a short. And that's it. So if you want to learn how to manage trades, work position, not only have an entry strategy, go watch any of your favorite trading YouTubers. If they only talk about an entry strategy or maybe a risk strategy, maybe those two, they're doing it wrong because it's entry strategy, risk strategy, size strategy, management strategy. There's a lot of strategies you need to have as a professional trader, and that's what I can give you. That's what I give you inside the walls of Trick Trades. All of those. They're all laid out for you. That sizing strategy will take you from a $2,500 account and build it to an $18,000 account within a 6-month period, as long as you do what I tell you to do. And then from there, it only grows higher. Those numbers we've noticed in our experience with our members and their success rate those are a lot smaller than the actual numbers that you will get. But that's what our projections are. We take a very professional approach to trading and a strategic approach to trading. So if that's what you want, that's what you're looking for, come to tricktrades.com. If not, you want to continue to enjoy my free stuff, by all means, go right ahead. But you do have to like and you do have to subscribe. I think that's only fucking fair. But it will take you longer. So if you feel like you have all the time in the world, by all means, continue on with the free stuff. For the real motherfuckers out there, come to tricktrades.com. Adios, folks. See you tomorrow.